Hey, welcome back, investor. Welcome to Smart Investing with Philip. Let's look at the market, what is moving right now, what is really taking shape right now. And please, if you find this very useful, please don't forget to subscribe and to like. So this is gonna help a lot this channel, and I appreciate a lot. Thank you so much, and it costs nothing. So first, let's look at the key indices. Okay, let's look at the key indices. First, we're going to start with the QQQ. This is the one I really like. I mean, yesterday we talked about the market bottoming, and it's more likely that the market will actually rebound from the 200 moving average. And you can see this is exactly what happened today. I mean, today you can see the market yesterday just went through the 200 moving average, then rebounded just slightly above. And today the market actually, look, we're gonna zoom again. This what happened today compared to yesterday. You see, it rebounded exactly from the level of 200 moving average and slightly up. These two candles here, this is an uncertainty candle that we call it, and an uncertainty candle. That means we don't know exactly where the direction is coming. And this is definitely a bullish candle. So basically the two combined show that there is a clear change of direction. So to me, this is a sign that the market will rebound from here. You can see the RSI is bottoming up as well. And at the same time, the volume is picking up. You see? It's picking up the volume, especially on the buy side today. So that's very key, important element from technical standpoint to see the market is exactly saying rebounding from the point I was talking about yesterday. So that's very good to know. So now let's move on to the S&P 500. You can see the story is the same. It rebounded yesterday from the 200 moving average, and then it sharply went above the level of yesterday. Actually, the size of the candle of the 2 days are almost the same. But what is different is the body, where it closes, where actually it opened and where it closes. This one you see is actually hardly moved, but today it show a sharp move up to the market, plus 1% for the S&P 500 and plus 1.3 for the QQQ. What is also showing is that the bond is taking the other side. I mean, you can see the equity market rebounding from the 200 moving average, but the bond market is doing the opposite. You see, it hit the 200 moving average at the level of 92.76, and then from that it was rejected. I think it will fill the gap here first of all, probably to touch again the 55 moving average, maybe move higher or just settle down, you know. So if we go to the IWM, because this one we didn't like it so much yesterday, we saw that it broke the upward channel that it was actually following for quite some time, almost like more than a year and few months, you know. It started in the beginning of 2024 up to today or yesterday. But it seems like it has rebounded sharply, or at least meaningfully, from the point of control that is about 205. It wanted to retest the 200 limits, but it rebounded today, which is a good sign as well that overall equity markets are quite showing some progress on the bottoming out process, you know. So what else we can say from a market standpoint? We can look at the MAX 7. MAX 7 is telling you exactly the same story, so same story for all the main indices and the MAX 7. You can see also rebounding from the 200 moving average, moving higher, moving to the key support level that we were talking previously in the previous video of the 50 level. So that's a good indication. So far, the prediction of bottoming out is taking shape. So I know there is a lot of noise on the market, and we're going to see what has been the headline today. And these are the noise that actually make the market nervous. You can see in Europe there has been a big sell-off in the German bond market. And then you can see also that a lot of Wall Street banks actually trying to scare a bit the investor, you know, that there's going to be a recession, it's flashing rising recession risk, and so on and so on. And this is why they did that, because you can see from the economic indicator that released today, you can see the important one is the ADP, employment change. The forecast was the economy would add about 140,000 employment, and it's only added 77,000, which is about half what the market expected. So definitely that was not a good sign from the market, and that's why people start to speculate there will be a recession in the next 12 months and so on. But I think they play a game of scaring people off to get the market even go lower so they can buy even cheaper. But let's see if it works. I don't think this is an indication of a recession. And also they are scaring people about the tariffs and all the problem. You see, Trump hails tariff as U.S. economy barrels into trade war, and they were talking about trade war pulses of a lot of negativity, like dollar faces biggest threat in the decade from scary move, summer says, and then there is all this headline negative about what Trump is trying to do with the tariff, the economy, the dollar. I mean, it's all a political game that is happening, and also the game that Wall Streeters want the market to continue to go down so they can buy some of the good stock even cheaper than it is today. You have to understand it's all a game. So on the PMI, global composite is good. There is no sign of recession because the PMI is at 51.6, expected 50.4. So it's much higher than expected. So a PMI above 50 is an expansion. It's not a contraction. Of course, the prior number was 52.7, but it's still higher than the market expected. And if you look at the trend, 51.60, 54, yeah, it's much lower than what we had in 2024. So definitely there is a decelerating of the economy, but it's not like a recession yet. Services PMI is 51, much higher than expected, 49.7. And if you see the business activities, service employment, service new orders, everything is showing really positive. So I think it's premature to say that we are expecting a recession. So key stock specific, you can see AMD has rebounded from the level we discussed yesterday. I mean, the Fibonacci retracement level was 0.78, and I don't think I told you that it will go much lower from the point of that we saw on the last few days. So 98, 97 was the lowest that you could see on AMD stock, unless there is a huge shock in the market. But I don't think it will cross that level. Otherwise, that means the full retracement from the crash of 2023 and all the jump that we did in 2023-24 is actually for nothing. I don't think so. We have erased already more than the gain in 2024. Do you know? We have almost erased the gain of 2020. We have erased all the gain of 2024, and we erased half of the gain of 2023. So AMD definitely is a stock to watch because fundamentally it's a good company. Palantir rebounded quite sharply today, 7%. I think this one I will not touch because it's still highly overvalued, and it's not the type of stock I want to chase. SMCI actually rebounded yesterday and today was flat, so nothing special about. The Bitcoin has increased back to 90,000, which show that the risk appetite is back in the market. You can see it when you have a channel on the Bitcoin, you know, was oscillating, stabilizing for a while. Back to November last year, you see, was trading between these two. But then it broke that channel, but then it went back today and yesterday back to the channel. So it seems like the market wants to stay bullish, want to show that they are not capitulating for the bear market, and then they are fighting to stay bull. On the Max 7 specific name, nothing really to highlight. NVDA, nothing much, you know, is defending the 55 moving average. I don't think that it will retest the $100 level because it's very cheap, $100. He tried already to go and push to $100, but there is a lot of activity and buying for NVDA. And if you remember the video of yesterday from the CNBC commentators, they were saying that the most active stock traded today on the platform, interbroker platform, is NVDA, Tesla, and Palantir. And they are not only buying these stocks, but they are buying the ultra leverage ETF based on these stocks, also on the QQQ and SPY. So there are still a lot of bullish spirit in the market, especially on the retail side. So let's see. But I think what we see today is a market stabilizing. I think they are waiting the numbers of unemployment, the employment numbers from on Friday. There will be a release from the employment number. And I think from there the market can move. Let's see, when is that? Yeah, you have the government payroll, manufacturing payroll, non-farm payroll, private unemployment rate as well. This is the number the market is waiting. So until Friday, don't expect the market to make big move. So that's pretty much for today. I think there's nothing much to talk about today. I mean, it's just the market stabilized today. Just a bit of a disappointment from the employment number, less than expected. The market, the economy created less job than expected. But I think the bigger number and what the market really is waiting for is the Friday numbers from the government. We know that there might be some fishy stuff on this number, but this is what the market is waiting. So we need to do what the market expects. So don't take some big move until Friday number. And from Friday, you will see how the market go back to the bearishness, or it will go out of this bearishness momentum, and we'll go back slightly and slowly back to the bullish trend. So let's see. So thank you for watching this video. It's very short and sweet, but sometimes short and sweet is good. And please subscribe to the video, to the channel, put a like and put a comment. That is really helping me to get this channel taking off, so more and more people can enjoy the inside of this channel. And also, if you follow this channel, you have a discipline that every single day after the market, you make a brief, you make a brainstorm of what really happened, the key move in the market, and what next. It's very important to stay disciplined, and following a channel like this is helping you to be disciplined every single day. Whether you want it or not, you just do it. Okay, thank you so much. Bye.